Hey Mika, you all good? You don't have any questions for me?
Nope. I just want to see, the way you trade. Remember, I trade futures, so I trade a certain way. So I just want to see how we're trading similar or how we're trading different.
That's the first time you're actually going to see me doing some technical analysis, eh?
Yeah. Other
All
than
right.
the YouTube video that I saw. But like I've been using Fibonacci for like ever since the very beginning because the person who trained me on Fibonacci and
Yeah.
extensions. I see you doing that, but I see you using support and resistance, but already my mind is already trading the way that I trade. I just want to watch you.
All right. Sounds good. This is GBP That's one of the trade. That's actually the trade we're currently in right now. I think we have about, I would say, over 250 pips profit on it because we actually did get in twice. So I'm going to show you guys why I called this trade. And pretty much is this was like a swing trade. So hopefully you guys can learn how to swing trade as well. This was a beautiful setup, and we've been in this trade for like I'd say almost 2 weeks now, and we took partial profit. We secured 70% of partial profit, and then we left about 30% running right now, which is also currently at break even, right? So that means we're not risking anything when it comes to GBP and ZD, right? I always start my analysis on a monthly time frame. Some people start the analysis on the lower time frame, right? Because I'm not a scalper. I like holding my trades, and I don't like being in front of the computer all the time. So I like starting my technical analysis on the monthly time frame. Then I work all the way down to H1 or even sometimes the 15 minutes time frame to actually get my entry, right? All I do in the monthly time frame is to place my key levels, right? So I'm going to grab my support and resistance levels, right? I'm going to place one down here, right? As you can see, this is a good support level, right? Let me put this down here. Let me zoom out so I can see everything, right? This can be a good resistance level, right? It just depends on where you're looking at it. Because let's say if you place a resistance down there, if you're looking at it from this to that, then this is a resistance level, right? But if you're looking at it from up there to that, then this becomes a support level, right? As you guys can see, the market was pretty much bouncing between 1.89344 and 2.08, sorry, 2.03819, right? Bounce, 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 bounce. Finally went above that resistance level, came back to retest it and close above it. Since then, it's been going up. But yet again, guys, this is the monthly time frame, right? You cannot just place an entry in the monthly time frame, right? You have to go, you have to start analysis from the monthly, weekly, daily, H4, 1 hour, and so on, right? Until you can get a proper entry, right? And then I'm going to place a couple more levels. As you guys can see, this can be a good support level as well. We have one, two, three, four, five, six, seven touches there, right? And then I'm going to place one up there, right? This is a descent resistance level, right? This is where GN is currently at. You can place a couple more if you want to, because this also can be resistance level as well. But to be honest, I do not like adding too many lines because it might confuse you a little bit, but we'll just leave it as that on the monthly time frame, right? Now we're gonna have to go lower to the weekly time frame, right? As you guys can see, those lines are from the monthly are still valid on the weekly time frame, right? So you don't need to you don't need to be doing too much on the weekly time frame, right? You can try to adjust the lines if you want to get the touches a little bit, right? You got one, two, three, four, five touches, and so on and so on. But the weekly time frame and the monthly time frame is pretty similar, right? And then now you're gonna have to go down to the daily time frame. The daily time frame, guys, that's where you should pay the most attention to, right? Because the daily time frame is going to tell you everything, right? The first thing you should look for on a daily time frame is the trend. As you guys may know by now, I do not counter trade, right? If the market is trending up, I'm going to be looking for buys only. And if the market is trending down, I'm going to be looking for sales only, right? So if you get the trend right on a daily time frame, like I'd say 85% of the time you're going to win the trade, right? As long as you're patient and wait for the market to come to your setup, then you should be good to go, right? As you guys can see on the left side, the market was trending down, trending down, trending down, right? So if you grab your trend line, right, grab it, place them all the way up there and drag it all the way down. As you guys can see, the market was what? Trending down, giving you highs, right? Low, lower high, and so on and so on and so on. And then the market decided to break above the downtrend, came back to retest it. Since then, it has been going up. So you guys can use this as a first confluence to tell you that GBP NZD is currently trending up. right? That's the first confluence, right? Remember, guys, you must get the trend right on a daily time frame, because the minute you do get the trend right on a daily time frame, all you have to do is for the market to create the next higher low for you to get in. The market is trending up, you should be getting low, high, higher low, higher high, and higher lows, right? And then you'll be looking to place it by the next higher low, right? So the first thing on the daily time frame is the trend line, right? If the market is going up, make sure you look for buys only, right? And then the second thing you have to do is you have to go to insert, right? You have to grab your rectangle boxes and you have to place your key structures, right? So as you guys can see, this was the low on GN, right? And then the market went all the way up to give you a high. Then it came back down to give you a wide, guys, right? If you've been watching my videos, you guys should be able to answer that, right? You got the low, you got the high, and then you got the what?
That's a high low.
You got the higher low, exactly, right? If the market is trending up, guys, you should be getting higher lows and higher highs, right? At higher lows, that's where you be looking to place the buys, right? And then the market went all the way up after giving you the higher low, it went all the way up to give you a white, guys.
That's
You
a
got the,
high no?
you got the higher, exactly, right? Got the
Triple
low,
top.
yeah, this also can be a double top as well, right? You got the low, you got the high, you got the higher low, and the market went all the way up to give you a higher high. And then the market came back down to give you what? A white, guys. All right, what do you guys call this?
Lower highs.
Sorry, say it again.
Or the bottom part,
Yeah,
the low or lower.
right. So this guy is higher than this, right? So what would you call this?
Well, from the top one, the first top one is lower, but it's still higher than those previous lows down there. Those other two blue ones you got at the bottom, those
Exactly.
are still higher, but of course they're lower than those ones you got at the top. But if you're trying to continue the trend, then yeah, we're starting back
Yes.
continuing low.
Yeah. So this makes
I
this
would
makes
actually
it a
call
higher
that
low.
ranging. That would
Yeah, this makes this a higher low, right? Remember, right? A higher low is
be different
simply
than I do.
Yeah, a higher low simply means is this guy is higher than the previous low, which makes it a higher low, right? And so on. This guy is higher than the previous low, which makes it a higher low. And this guy is higher than the previous high, which makes it a higher high. If the market is trending up, the structure you'll get is higher lows and higher highs, right? And then you'll be looking to get at the next higher low. It's really that easy, guys. When I tell you the strategy is so easy to use, right? You just mark your key levels on the monthly and weekly time frame, go down into the daily time frame. That's where you actually look for the trend. If it's bullish, you look for buys only. You do not counter trade it, do not try to sell it. If it's bearish, you look for sales only, do not counter trade it, do not try to buy it, right? And then after you get the trend right on the daily time frame, all you have to do is grab your rectangle boxes to place your key structures, right? You get the low, high, higher low, higher high, higher high, and higher lows, right? And then the next step is how do you know when to get in? Right? That's the crucial step, right? So that's where the Fibonacci retracement comes into play, right? My fib levels are might be different than the fib levels um uh, that you might use, right? But those are the levels that work for me that I actually took the time to back this that works for me, right? So all you have to do, guys, if you're looking for a buy, since you know the market is trending up, you have to start the fib from the low, right? You drag it all the way to the high, and I can guarantee you guys, the market always gonna come between the 50% and the 61%. That's where you'll be looking to place the buy. As you guys can see, the market dropped to the 61.8% nicely. Give you 1, 2, 3 touches at the 61% to create the higher low. And guess what? You're going to target the previous high for TP1, which is always going to be at the 0%. Then you're going to target minus 27% for TP2. It is that easy to use the strategy. Very, 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 very simple. And you'll be catching like a lot of pips, like you can literally, that's pretty much a swing trade, right? Let's say if you do get in here at the 61.8%, right? You place it from the higher low and drag it all the way to the minus 27%. It's about 160 pips, right? If you do get in at 1.0 lot size, that's $8,000, right? If you're getting at 0.10 lot size, that's about $860. If you're getting with 0.01 lot size, that's about $87, right? Something like that. But that's all there is to the strategy, guys. You got the low, high, higher, low, right? You place the fib from the previous low all the way to the previous high, and you'll be looking to get in between the 50% and the 61% retracement. That's where the next higher low is going to be at. Obviously, like we didn't get in that.
You know,
Go ahead.
Uh, do you put your fib on the bodies or the wicks?
That's a good question, right? I'd say it depends, right? The reason being is if there is news, let's say if you see a huge wake, you cannot really use it with the Fibonacci retracement because that's not part of the technical analysis. That was news. You cannot use technicals on news if that makes sense. But if it's just like simple wakes like this, then you can definitely use it, right? But if it's like some crazy, for example, this, right? You cannot place the fib here. You can have to place the fib from here to that, right? Because this was literally news because this was like let's see how many pips. That's like that one wake is so many. It's like 800 pips. So obviously you cannot use the fib from the wake down there because this was news, and you cannot use technical analysis on news if that makes sense, right? But if it's like small wakes like this, you can definitely use it. Grab your fib, place it from this, right? To that, and then you'll be getting at the next 61.8%, right? Um, does that make sense? Yes, you can use it on wicks to wicks, but make sure the wick is not like was not like news, if that makes sense, right? Because if it's news, you cannot use it, right? You cannot use that wick, right? Because news and technical analysis, they don't go together, right? So make sure you know if it's news or not. You will be I'm pretty sure you'll be able to tell if it's news, right? Because you're gonna see some crazy wicks, right? Usually the market will give you small wicks like this, but if it's like a huge wick, that was definitely news for sure. Does that make sense?
Yeah, but do you only use the fib on the daily time chart?
Yeah, the reason I started it because I used to use it on the 4 hour and 1 hour. The reason I started using it on a daily time frame because the daily time frame has a less noise and less false breakouts, right? Because if you go into 1 hour, like you might be thinking this is a higher sorry, a higher low, because you might be placing the fib from here to there and thinking this is the higher low, but that's not right, right? Because if you look at it on the daily time frame, right? If you place the fib, right? If you got the fib, if you place it from this to that, guess what? The market never comes to the 50%, right? But on the 1 hour and the 4 hour, it might look a little bit different, right? So it's best to actually place the fib on a daily time frame because it's less noise and then it's more accurate, to be honest. But yeah, just use it on a daily time frame. And I'm going to show you how I managed to call the GBP and ZD trade, right? Like I said, if the market is trending up, you look for buys, you grab the rectangle boxes, you place your lows, you place your high, you place your higher lows, you place your higher highs, and then use the Fibonacci retracement as a tool to tell you when to get in, which is usually between the 50% and the 61% retracement, right? That's what we've been looking for. And then all I did, guys, after the market created the next higher high, right? This guy, because this guy became higher than the previous high, and then this became the higher high, right? So all I did was place my fib from the most recent higher low, right, to the most recent higher high, right? And then guess what? Actually, let me let somebody up, right? You place your fib from the most recent higher low to the most recent higher high, and then guess what, guys? The market came to the 61.8%. Obviously, this was definitely false breakout, right? Give you one, two, three. It's give you at least like so many, like the more touches you have at the 61%, the better it is, right? It simply means the market is accumulating before it can take off pretty much, right? Gives you one, two, three, four, five, so many touches at the 61%, right? The minute you get in at the 61%, I usually place my stop loss at the 78.6, right? And then I'll be looking to target the previous structure, the previous high, which is usually at the 0% for TP1, right? If I zoom out a little bit, and then I'll be looking to use TP2 at minus 27%, right? So that's why we're currently up about 200 and some pips on GBP and ZD, right? Because we know the market is trending up, so we're looking for buys only, and then we use the Fibonacci retracement as a tool to tell us when to get in, right? We have the low, we have the high, right? We have the low, we have the high, we have the higher low, we have the higher high, and the market came to give us the next higher low, right? We placed the buy, stop loss at the 70.6%. Then we're currently holding GN right now. We're up in good profit and we're going to get out at the 0%. And if you want to, you can even hold it to minus 27%. Remember, guys, if the market is trending up, the market must give you higher lows and higher highs, right? So that means the market must go past the previous higher high to give you the next higher high, if that makes sense, right? Just like this, right? This was a high, the market went all the way past it to give you the next higher high, and so on and so on and so on, right? And that's why I called the GBP NZD trade. I called it, right? And you're currently in profit, and you're going to target 0% for TP1, right? And then minus 27% for TP2, right? So that's about let's say how many pips, because we got in at the 61%. That's about 500 pips at TP1 and about 752 pips for TP2, right? If you have a big account, use 1.0 lot size, you'll be making about 5K TP1 and about 7K at TP2. Right? It's that easy to trade with this strategy, right? Obviously, guys, after you place your fib and all that, you have to go lower into the 4-hour time frame to get as close as possible to the entry price, right? Which is the 61%. You see this? This was false breakout, false breakout, false breakout. But the minute you see it go above the 61%, close above it, right, and giving you small, I'm going to show you, I'm going to show it to you guys on the 1-hour time frame. You see this, right? One above the 61% and giving you small higher lows on the 1 hour, small higher lows on the 1 hour. Then it finally decided to take off, right? But that's all there's to the strategy, man. Trend, key structures, and then fib. That's all you need to make money. That's literally all you need. And you do not need to be in front of the computer 24/7 to trade, because you'll be trading on the higher time frame and you'll be able to catch 20 plus pips, and that's all there is to the strategy, right? You guys have any questions for me?
Nope, seems pretty easy for you. Also, you're trading like on a student style. So yeah, I like it. I like it.
Appreciate it, appreciate it. Yet again, you'll be able to trade anything, futures, stocks, whatever you want to trade is because like the trend and structures move the market, right?
Other than that, like I like this strategy for options. I'm gonna start playing my options with this one because I swing options and it's
Right.
pretty clear. Yeah. So that I like this one.